In today's video, I'm going to be discussing mortgages and interest rates, as well as where are rates going to be by the end of this year, as home affordability is basically not even a thing anymore with rapidly rising prices and high interest rates. I have all the details for you here in the video. Let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons down below. I really do appreciate it. Also, if you're new here or if you haven't done so yet, please make sure to subscribe to the channel as well. Totally free to do so. Thanks so much. I really appreciate your support. Thank you for being here, and let's get into it and talk about mortgages, interest rates, and where are these rates going to be by the end of the year. Now, as I film this video, we're in the second half of 2024, and interest rates are still sitting very high on mortgages. Now, we could be looking at a 30-year fixed rate mortgage, which is by far the most popular. We could be looking at a 15-year fixed rate mortgage, which is also pretty popular, but not quite as popular as the 30-year. But again, these are the ones that I want to focus on here in this video. Now, for the last, call it year and a half or so, maybe even longer than that, we've been oscillating right around this 7% range. Sometimes we tick above 7% and we move a little higher in kind of the mid 7% range. Sometimes we tick lower into kind of the mid-ish high portion of 6%. But regardless, we've been right around that 7% for at least a year and a half now. But a lot of people that are in the market to buy a home right now are struggling with a variety of different things. Number one, interest rates and home affordability. I mean, that's a very obvious one. Home affordability, like I said at the beginning of the video, is like basically not even a thing anymore because of high payments, because of the interest rates, as well as every time you turn around, month over month, year over year, we continue to hit new all-time high record home prices. That's not helping either, right? So prices are ticking up because of lack of inventory, a lack of supply on the market, and then a limited amount of buyers. And basically, we're just having a major price increase type of situation. And then we have the high interest rates making it very unaffordable right now for a lot of people. It's a really kind of tough situation. We're in this strange part of the market right now where we're not really seeing a whole lot of relief, okay? But many of us want to know if we're in the market to try to buy something between now and the end of 2024, can you give us a little glimpse into what's going to be happening with interest rates? Well, I've been doing a bunch of research on this, and I want to know myself too. I follow all these markets very, very closely. It's how I always want to know this as well. I follow the real estate market very closely. I watch stocks, crypto, all of it. I watch it very closely because it's all highly correlated. If you watch these markets, you can kind of clearly see where the money is going, right? People put their money in the markets that make the most sense at the time. Right now, it's not real estate. It's kind of stocks as of now. That's why we've been seeing the market go crazy in stocks for the last couple years, right? Because that's where the money's to be made right now. It's not in real estate right now, but there's possibly some opportunities out there, but possibly not that many as well, okay? But anyway, so I've been doing a bunch of research on this. I've been reading a bunch about it as well, kind of getting some opinions out there to see what are people thinking as far as interest rates, okay? So that's what you kind of want to know, and I want to know this too, okay? But by the end of 2024, now, as I film this video as well, we're still kind of waiting to see what the Federal Reserve is going to do going forward with their interest rate policy. Now, as I film this video, they have not cut interest rates yet, but it's anticipated that they're likely going to be cutting as early as the middle of September with their FOMC meeting, okay? So if they start cutting then, and if they start cutting with every consecutive meeting after that, basically what we're thinking by the end of the year, we could maybe come down a little bit somewhere between the mid to kind of low-ish 6% range. But here's the thing. The consensus across the board, everything I've been reading about this, everything I've been doing research on, everything that I understand this as well, we're likely not going to breach anywhere near below 6% on a 30-year fixed rate mortgage by the end of this year, okay? So probably not the news you wanted to hear, but I'm just telling you, this is what I found based on all the research that I did with my experience, what I know about it, everything like that. It looks like if we're lucky, we may be down around the 6.25% to maybe 6.5% range sometime by the end of this year, provided the Federal Reserve comes in and starts cutting interest rates as well. And remember that it doesn't directly impact mortgages, but it does kind of passively impact interest rates on mortgages as well. Okay, so it's important. We got to see what the Fed does going forward, because that just, it changes the interest rate on a lot of different things, okay? Now, here's another thing I want to point out really quickly as well. Now, maybe you've heard me say this before in other videos. I've only said this a couple times. In my opinion, usually November through about February, and again, it's going to range a little bit based on where you're located in the country, but usually November through about February, in my opinion, is a great time to buy if you're looking to buy. Why? Are people out there buying houses at that time? No, what are they doing? They're worried about the holidays. They're worried about shopping. They're worried about a Black Friday deal. They're worried about, saving 10 cents here on some little gadget or some gifts for somebody, right? That's a great opportunity because there's very limited buyers. Sellers are probably coming in thinking, it's winter. This is not great. Kind of need to unload this house, right? My point is, if you are in the market to buy something, regardless of where you're located in the country, obviously there's going to be slow times a year, but in my opinion, from what I've seen, usually that November through February time frame, somewhere around there, I would say the golden time frame is like November through January. Those are like the 3 months that I would say really some opportunities out there, okay? I'm just saying, just be prepared. If you're looking to buy something, you may want to wait until then. But again, do what is best for you. Again, I'm not here to tell anybody what to do. I'm just simply saying. But by then, okay, let's just say that you wait until maybe, I don't know, late November, early December, mid-December, something like that. The Federal Reserve has already had a few meetings by then, okay, or they will. We're not at that time frame yet as I film this video, but by then we'll have a couple Fed meetings under our belt at that time, okay? So if that were the case, then we could maybe see a couple cuts by then, which could possibly bring rates down. Who knows? Maybe 50 basis points, maybe 75 basis points, something like that. But remember, at the end of the day, it's all going to translate into payment, dollars and cents going out in the form of your monthly payment as a result of your mortgage, right? So if you can bring interest rates down, I don't know, 0.5%, something like that, it's going to save you a bunch of money over the course of your entire 30-year fixed rate mortgage. It's going to save you a lot of money. Now, obviously, you can always refinance at some point in the future, but that's maybe not something that everybody wants to do. Just saying, that is an option as well, provided rates come down significantly, which they will as well, okay? And by the way, I want to point this out really fast. These rates cannot sit where they are forever. They cannot. If they did, the market and the economy would be in the gutter. It would be very, very bad. These high interest rates like this are sustainable for a short amount of time, but not long term. It's just not possible. It would absolutely crush this economy, and it would crush this country if they were to keep these rates this high for a prolonged period of time. Several years, no way. I mean, this economy would be gone. Kiss her goodbye. That's about what would happen to this economy, okay? So anyways, that kind of makes sense. So that's kind of what I'm finding right now is maybe kind of 6.25-ish, 6.5, maybe if you're lucky, 6 1/8, something like that, maybe if you're lucky, but I would not count on anything below 6% on a 30-year fixed rate mortgage by the end of 2024. Now in 2025, for sure, I for sure see that. I for sure see rates going down below 6% some point in 2025. But here's the thing as well. Remember this much. The lower that rates get, the more buyers then to come back into the market, okay? If anybody's thinking about buying a place right now and they're looking out there thinking, oh, my interest rates are about 7% and, prices are going up, things like that, they're probably thinking, hey, it's not urgent for me to buy a place. I'm good. I'll just wait a little while. But if rates come down to say 6%, 5.5%, 5%, 4 3/4, you better believe there's going to be a lot more buyers in the market. There's going to be a lot more buyers competing over that same amount of supply or inventory, and it's going to drive those prices higher, especially the good properties, the good houses. Those are going to be the ones that come in, multiple offers, people bidding them up, offering over asking, things like this. Just be prepared, okay? When interest rates come down, affordability will technically be a little bit better, but it'll also drive prices higher because more buyers, more demand. It's the supply and demand issue, right? More buyers means more demand. Prices must rise unless, the only equation to that would be, unless we get a massive influx of supply at the same time. Don't really foresee that happening. Just simply saying, okay? So just remember that much as well. But I hope this helps you. If you're in the market to buy something, again, just kind of be prepared. We're probably not going under 6% by the end of this year. Highly unlikely. Now, on a 15-year fixed rate mortgage, remember, your payment's going to be a lot more than a 30-year. But yeah, by the end of this year, you could maybe see very high 5% range, upper end of 5%, maybe just sub 6% slightly on a 15-year. But just be prepared for that as well. But again, remember, your payment will be a lot higher. Talk to your loan officer. They'll be able to talk you through those details and everything about it. So kind of makes sense, right? So Anyway, let me know down below in the comment section if you want me to come back and elaborate on anything further. If you like these ideas, if you like this information, just let me know. If not, that's totally fine too. It doesn't matter. Otherwise, please make sure to like the video, share the video with your friends on my social media, subscribe to the channel as well. Big subscribe button down below. Otherwise, check out the other videos here on the channel, the thousands in the video library, the ones I've hand selected for you down below in the description or the top of the comment section. And right now, popping up on your screen, you'll see some videos there as well. Thanks. Really appreciate your support. Just want to do what I can for you. I'm reading tons of stuff every single day, and just want to translate that valuable information to you here in these short videos. Again, thank you. Really appreciate you and your support. And have a nice day. Take care, and catch you again later in the next video.